radio for a really great future. We're talking real money.
Welcome to Talking Real Money. Tom Cock here. I know, like you, it's the anticipation is it's just killing me, right? I mean, wow, this is so big. And I know you've all been following the developments very closely. And, just things like this don't come along very often, right? I mean, this is a huge, huge, huge deal. And, oh, no, you thought I was talking about the Taylor Swift concert. No. That's somebody else. That's another channel. This is Talking Real Money. We talk about money here. What I'm talking about is what you as investors may be talking about. We'll mention that in just a moment. But first, our telephone number, because the show really is about you. Yeah, we've got some topics, got a great guest coming up, voice you'll recognize, but how about your questions and calls? Easy to do, 855-935-8255, 855-935-8255. And because Dawn is out on vacation and cannot stop me right now, I will give anyone who calls a free Talking Real Money shirt, and they are totally awesome. Red, got a big logo on them. So give us a ring at that number, 855-935-8255. So we'll take that up. But, okay, yeah, the Taylor Swift thing was my way of trying to be clever, because for those of you who follow along at home, you know the stock markets basically have gone up 10 straight days. We're heading towards almost being completely back from the awful bear market low that we had back in October. So the question du jour is, what's next? The question is, what should I be doing? And the answer is, I hope you know. But let's talk about where we are. It's year to date. Year to date, the S&P 500 is up 19.1%. Remember, it lost double digits last year. A globally diversified portfolio of not just large U.S. stocks, but all stocks up 10.5%. Perhaps you're in a more balanced approach. 60% stocks, 40% bonds, you're up 7.2%. But what about this winning streak? The Dow Jones Industrial Average, an index you should not pay attention to, but it gets a lot of attention, up 10 straight days. And that has led many of you to be more bold, more speculative. You're out buying things like futures, the put-call ratio, a measure, of course, fear in the market, has fallen to its lowest level since January of 2022. You're just feeling great, right? The economy's going to be all right. Inflation is beaten back. We're going to have the soft landing that the Federal Reserve has been talking about for the last year plus. Should you buy any of that? Does it matter? And the reality is no and no. We know one thing about investing, and that is you do not want to follow your emotions. You don't want to get caught up in what's happening today. FOMO and YOLO and all these things have led to disastrous decisions over the last decades. This is one of the reasons that the average investor makes somewhere between 3 and 5% a year less than just being invested in the market, because you have a tendency to feel great when you shouldn't and feel bad when you, in other words, right now, you should feel horrible because stocks have been on a roll. Stocks are higher. And the risk level is higher, of course, right, than when stocks have gone down, because there's less risk. The prices are lower. And at the end of the day, as we've talked about many, many times on this program, here's what you should pay attention to. The rate of return you're trying to make, how much you're trying to grow your portfolio, right? That's one. And how much volatility you're willing to accept to make that money. Most of you don't know that. You're invested generally not the best. You have mostly large U.S. companies. You don't spread things around enough. You don't have small. You don't have value. You generally don't know the stock-to-bond ratio. And here's the worst part. You generally don't know how much you're paying others. Just talked to a really nice young man, 27 years old, and he was paying a broker 5.7% every time he put money in his Roth IRA. You should not be doing that. You can get an index fund that costs almost nothing. You don't have to pay any commissions to buy it. And in his case, you just put that money in every month and let it ride for 30 plus years. So, yeah, you got to know your rate of risk. you got to know what you're trying to do in the market rather than paying attention to the Dow Jones, Taylor Swift, or any of the above. Coming up, a voice you're going to know well, and doggone it, if you're like me, you don't get to hear from enough. We'll be right back. 855-935-TALK here on Talking Real Money.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Well, welcome back to the program. Don's on vacation. I'm Tom. We're here to answer your questions and calls, anything money related. The show is Talking Real Money after all. So, and so we're here. We take stuff from everything from what do I do with money I just came into to can I retire? How do I fix this, etc. So ring us up, 855-935-8255. That's 855-935-TALK. Now, this is great, and so we'll get to those calls in just a minute here, but it's great for me. I mean, he came in today. The cape is a bit tattered, but it's intact. I mean, it's clean. It's been through the wars. Herb Weisbaum is the Consumerman. I'd play the sound, but it doesn't work. And you still hear his fine work all the time on the radio. Contributing editor, checkbook.org. Man, I go through all this Emmy award-winning broadcast, but it makes me feel bad about myself. So, and I think your one description called you the one of America's top consumer experts. I would say the top broadcast consumer expert. That would be my take, and you're the guy who sort of introduced the whole genre. But thank you for being on Talking Real Money. And I got to say, I find this whole aspect of people getting scammed, people getting ripped off, interesting psychologically. Bloomberg does an entire episode, the magazine on called The Heist Issue, which I find interesting. And then literally a week later, Wall Street Journal had a piece on why we get scammed and what to do about it. And their take was, we have a truth bias. We have a tendency to believe people first rather than not believing them. But you've been through the wars with all this stuff. What's your take on why people get taken advantage of?
Well, first of all, anybody can get taken advantage of. A lot of people think, I'm too smart to get scammed. No, anybody can be scammed. They're basically, what I've seen over the years, two reasons: greed and gullibility. People are too trusting of things. The new generation is way too trusting of things that come in digitally. Just because it comes in on your smartphone or your computer or whatever does not mean it's true, or if it's on social media. Of course, there's a lot of greed involved. I mean, when those Nigerian letters started coming out that I'm the prince and I have $10 billion buried in the desert and I want to give it to you. By the way, been doing this so long, Tom, that I actually have the original letters with Nigerian stamps on them in my scam collection.
Wow. The Museum of Herbs. There, you got to put that in there.
And they became faxes and they became emails. But do you really think that somebody out of all the people on the planet Earth found you and they want to give you 10% of this money? That's greed. So there's greed and gullibility. But also, these are pros. You are up against people who try to scam people 8 hours a day, 5 days a week, who have manuals and training. And if they don't succeed with you, they learn something. Why did this fail? How do I do the pitch better next time? And they catch you off guard. You're watching TV. You're having lunch. They know you just had someone in your family die. I mean, they read birth certificates and death certificates. They know when you're crazy, and they just hit the part of your brain that's emotion. Now, we got to do it now. Let's go. The clock's ticking. Or they scare you. You're going to be arrested. The police are coming. You're going to be sued. The fear kicks in, not the thoughtful part of your brain. And so you respond, and afterwards you realize you did something stupid. But as I always say when I make speeches, in the digital age, there's no undo button. You know, in the old days when I started, I'd be on Cairo TV and somebody called and say, Mr. Weisbaum, thank you for warning me. The check's in the mailbox. I'm going to go get it. I'll put a stop on the check. Now, when you put your social security number in and hit submit, or your date of birth and your driver's license number hit submit, there's no undo button. It's gone. They have it. So that's the problem that we have right now.
And you got to say, we're talking with Herb Weisbaum, the Consumerman. Is it going to be worse now with AI?
Well, I'm about to do a whole episode on our Consumerpedia podcast. Sure. But the people I've talked to getting ready for this, there's no question that the bad guys will use technology to their advantage. They use the internet to their advantage, use social media to their advantage. They're going to find a way to use AI to their advantage. If for no other reason, it'll cut their overhead even more. Just like the internet cut their overhead from mailings and telephone calls. Sure. They can have AI write the scam emails. They can have AI monitor what's the traffic coming back in again. If they're doing a romance scam, they don't have to sit there in some foreign country with people sitting at phones responding to their so-called lovers. They could have AI do that sort of thing. So So there's no question that the technology has enormous potential, and it also has enormous possibilities and opportunities for the criminals in the world.
All right. And you're, as I said, you're writing regularly and rather prolifically, I got to say, because I read your piece on EVs, which we'll talk about in just a moment. But I was more interested about the dark patterns. Is this something we go and look at the skies for late at night? The dark
No, that's
pattern?
dark matter.
Dark matter. Okay. Yeah. I was hoping. Anyway, so what's that all about?
Well, dark patterns is something that the federal regulators are taking a look at very closely. The CFPB, the Consumer Financial Protection Bureau, and also the Federal Trade Commission. And those are things such as when you go on a website, it's really easy to subscribe and it's really difficult to cancel. I'm sure you've had that situation.
Absolutely.
There is now a proposal in the hopper that a rule that it was called click to cancel, and it means that it would be as easy and the same pattern to cancel a subscription as it is to start it. If you go on the website and it's up here, it says subscribe on the home page, it would have to be next to it, cancel. You would have to
wait, is that going to happen? Because right now, there are places literally where you go online to sign up, and then to get out of it, you have to call them, and they don't answer.
Not only call them and don't answer, there's some gyms that were cited for dark patterns make you come and do a certified letter or show up in person. I mean, that's just ridiculous.
Yes.
And so if this proposed rule goes into effect, the FTC would actually regulate that, and that would be the requirement. I don't shop very much on Amazon, even though I was one of the first national reporters to report on Amazon when I thought it was a river in South America. And I'm not a Prime member, and I looked on, and all of a sudden it's pre-checked for the next day shipping, $14. Well, why is that? Why isn't it checked free shipping and let me change if I want to do that, or not checked at all and give me the option?
Sure.
You know, Amazon was just sued by the federal government for doing dark patterns, things such as making it incredibly difficult. The one they just did was Prime membership. They made you jump through so many hoops to not become a Prime member. The FTC says that people signed up not knowing, couldn't back out. They say they didn't do anything wrong. They're not settling on this one. It's going to go to court.
Wow.
But from past record, when the FTC sues, they did their homework. They got a lot of stuff and emails and all that kind of thing. I think this one's going to be interesting to see how it plays out. But that's a dark pattern. You sign up for a free trial, automatically the fine print, you're checked out, and you'll get a 30-day.
Right.
Every 30 days, you'll get this, and we'll charge your account automatically. That's why I advise against free trial offers unless you know it's a reputable company, because that's why they give it to you for free but charge shipping and handling. They've got to get your credit or debit card to do the little shipping and handling,
and then
they have it.
Yeah.
Then they continue using it. Those are dark patterns that have to stop.
That drive me nuts. 855-935-8255 is our telephone number, and we've got a couple people waiting. We'll take their calls in just a moment. But let me just ask you in a general sense here before we go to break. Is people getting scammed in general, is it getting better or is it getting worse? Are people more enlightened about this? Are people more aware of it? Is it pretty much the same as it's always been? I mean, you've been doing this for 40 years.
It's very depressing because people are aware of it and they're still getting scammed, and the numbers are horrendous. I mean, no one knows the true number, but some of the congressional reports that I've seen are upwards of $60 billion a year in America, and that doesn't even touch the thing. Because of technology, the scammers are able to hit more people more easily at a lower price point for them, and they're able to disguise things. I mean, when you get a shipping notice that says Federal Express or DHL or UPS, and it's got their logo, and it's got the web address, it's faked a little bit that looks like theirs, and you click on that link or download that, you open the attachment, you're downloading malware secretly into your computer. You have no idea that's happening. All this stuff can be going on in the background that wasn't possible many, many years ago. They had to work a lot harder to get your money. It's really scary.
More from the Consumerman, Herb Weisbaum, as we continue talking real money. 855-935-TALK. We'll be right back.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Hey, welcome back to Talking Real Money. 855-935-TALK, 8255. And today, if you call, you're going to get a free, amazing red Talking Real Money shirt. So we'll send that out. Yeah, I know they look pretty slick. Herb's got one. And we'll be talking more with Herb in just a couple minutes here about EVs and this lengthy report. That's a great report. I loved it, especially as a guy in the market for one. But first, let's go to the phones. And Jeff now joins us. Hi, Jeff.
Here's my question. It's on expenses. I have a Vanguard IRA account, and at the portfolio tool. It tells you what your average expense ratio is across your funds, and it was at 0.15, and that's on a $160,000 account. Can you give me a ballpark idea of what dollar amount that 15 basis points represent? That's my first question, just off the top of your head.
Well, it sounds like around $1,500
a year.
Yeah, a little more than that, right? Because on 100,000, yeah.
How much now? You said total?
Well, I didn't hear the amount you have in the account.
600,000.
Oh, 600. I thought I heard you say. So it's 0.015.
5, yeah.
Yeah. So that sounds like let's see. So $900 a year. I always have trouble with the decimal points on these things. It's very inexpensive, by the way. So because 1% would be 6,000. So yeah, that's about right. Yeah.
So I don't know if I did something foolish. I converted all of the Admiral share classes over to ETFs because I'm comfortable with doing the trades and all that. And now when I went on the Vanguard site after they cleared and got converted over, this is in the IRA, it's now at 0.10. So did I really not get much more bang for my buck?
Well, you got a little bit.
I mean,
and the other thing, this is in an IRA, did you say?
Yeah, yes, sir.
Okay. So you don't really get another benefit of exchange traded funds is their tax treatment is better than mutual funds due to the way they're set up. But that doesn't really change things in an IRA. I mean, let's step back because you kind of at the beginning alluded to how am I doing? You're doing great. I mean, the average expense ratio for stock funds is still like 0.6. So you're way, way, way down the scale. So, but here's the thing. I mean, without looking at the portfolio, I couldn't tell you how diversified you are, whether you have all the right asset classes. It's a fascinating thing because generally people come in and think I'm hitting a home run because my expenses are low. Yes, that's important, but make sure your stock to bond ratio is correct. Make sure you're properly diversified among all of these asset classes. And I can tell you this year, one I know people aren't in because I see it almost every day is emerging markets. Emerging markets, small cap right now is up 11.5% year to date. So you want to make sure that your asset allocation is correct. But overall, no, you're doing great.
One last question.
Yeah.
I have a brokerage account, $82,000, and it's using the 10 fund method. 5 out of the 10 I could convert, and right now it's at 1.2 basis points or 12 basis points. Is it worth
0.012
5 to get it down? Yeah.
Yeah, in a brokerage account it'd be huge because due to they're going to just have a lot fewer capital gains in that exchange traded fund than you would have in a mutual fund. So yes, definitely. I think honestly, Jeff, the way the industry's headed, because dimensional funds is trying to do this, you're going to see everybody sort of jump on this bandwagon because the way I look at it, it's a free lunch from the IRS because otherwise to move that over generally would be you have to pay the tax. In this case, they're letting you do it without paying the tax. It's a pretty good deal.
And
so yes, your expenses are low.
And then I got to make sure that the cost basis gets moved over because I use ID specific right now.
Yeah, and they'll do that for you.
On the cost.
There's a lot more rules on all that stuff.
I appreciate it.
No, thank you for your call.
Can I get a shirt?
Yeah, absolutely. Yes, we will get your number and we'll call you to get the shirt. Or you come down here and take the one right off Herb's back. It's up to you.
Pre-owned.
Pre-owned. It's all ready to go. It's been washed twice and only slight. Thank you, Jeff. Slightly sweaty because it's like 105 degrees in this office on Saturday. They don't turn the air on Saturdays.
Outside, 105 in here.
Yeah, I know. So it doesn't make any sense. All right, we'll be back. You're going to want to hear about the electric vehicle situation with Herb Weisbaum. Our telephone number 855-935-TALK. We'll be back with more Talking Real Money.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Back to Talking Real Money. We're here every week answering your calls. And by the way, we do that 24/7. Love to have you call right now and be on the show, 855-935-8255. And we're going to give you a beautiful Talking Real Money shirt if you give us a call and ask a question. But if you can't make it today, we take the calls all the time and edit them up and turn them into podcasts. Our podcasts have been very, very popular. And in addition to that, you know that we believe in education. have for 25 years helping people. So we have another class coming up that's going to be taught by one of our advisors, Roxana Butner, and Diana Bacon, one of our CFPs. That's coming up on July 29th, Investing 201. Oftentimes we kind of talk about, here's how to build a portfolio, make sure you have this and this and this. We're going to get into really the building blocks of that, more specific. So if you'd like to, it's an online course, of course. That is next Saturday, the 29th, 9 a.m. Pacific, and you can go to apellawealth.com, click on events. You can register for that right there. And speaking of education, a guy who's been educating all of us on doing better as consumers, which I wish I'd taken more of your advice over the years, is the Consumerman Herb Weisbaum. You read his stuff all the time. Still, I say still because you've been doing this for 40 plus years. It's a long time.
Yeah.
It's a lengthy career. Checkbook.
I like it.
.org, which is great. And one of the pieces you wrote recently is I think it puts war and peace to shame. It's a 500-page. No, it's not 500. It's printed out to a lot of pages. But it's a great piece on electric vehicles. Now, I was fascinated by a couple of the numbers here. 8.6% of new vehicles sold in the United States. I think this is from 2020 data, you said.
That was the first quarter of this year, 2020.
Oh, 2020. Okay, so our electric vehicles. As I have publicly stated, I'm in the market for one. I got to get a car of some kind because my daughter's learning how to drive, and I really would like to make it be an electric vehicle. So if myself or anybody else out there doing it, what's the best way to find the car for me?
Well, you should look at review sites, first of all, such as Consumer Reports, because they review these new vehicles. Second of all, the experts all say you might want to not buy the first year of an electric vehicle. So that's actually any vehicle is the rule for that. They're very reliable. The battery packs have been lasting more than predicted. I mean, they're basically good for 8 years or 100,000 miles. There's no problems basically with the battery packs. The problems tend to be with the other technology in the vehicle, the navigation systems, the radios, all the other stuff they're putting in, as with any other vehicle. Sure. So most of the experts say maybe wait the first year till they work out the bugs. There are several models that have been on the market for a while. There are only right now 27 models that qualify for the 23 models, for the new federal tax credit.
I don't understand that. So tell me about it.
So there's 97 vehicles that are now available in the United States.
Okay, that are fully electric.
Right.
They're not hybrid.
Fully electric or plug-in hybrid.
Got it.
Okay. Plug-in hybrid means you have a gas tank, and if you're in an area like Montana and there are no charging stations, you can go on gasoline for a while, which may be a better option for some people than going fully electric. But only 23 qualify for the new federal tax credit. 5 Tesla models, Chevy's Blazer, the Bolt, Equinox, and Silverado, Rivian SUV and truck, Ford's F-150 Lightning, Mustang Mach-E, and the Cadillac Lyriq, among others. To get the full credit, the whole goal of this Inflation Reduction Act was to get these vehicles and the batteries made in the United States. So they have qualifications. The vehicle right now must be made in North America. Okay. So if it's made in Japan or if it's made in Korea, that doesn't qualify at all. Number one.
And how big is this tax? Do you have to be somebody who itemizes their taxes to get the credit?
This is a credit.
Credit, okay.
This is a credit, so it's cash money.
Bing.
So it's up to $7,500 if you and the vehicle qualify. So there were income requirements. They wanted to make electric vehicles.
What's the top for the income?
Oh, you're going to ask me all those questions.
All right.
No, it's all in the article here.
Okay, it's an amazing article.
But they're trying to get the middle class to be able to get the EVs and not just...
Because they're expensive, as you point out in your article.
The average electric vehicle right now was like 70... What was my...
I think it was 60-something.
$67,000. I mean,
not cheap.
That's
$381.
That's a lot of money compared to the average vehicle.
Yeah.
So, but there's also rules about where the battery is made, where the minerals for the battery come from, and those will get tighter and tighter as we go through the years. Again, the goal is to see plants built in the United States, manufactured and in North America, to take it over from overseas, not be beholden to China that's got so much of the lithium supply, which we don't want to do. So that's that. So you may qualify for part of the tax credit. You may not qualify for all of it. You may not qualify for any of it. So that's just one of the considerations. The one thing I actually learned by doing this report, and I learn every time I write one of these Gone with the Wind stories, is that,
Thank you.
As you know, and I've talked to you before, auto experts have always said you should not lease a vehicle if you keep it more. My brother turns over a car every 3 years, 2-3 years. He loves to do that. Wants a new car, doesn't want to hassle. Okay, that's fine. Or if you have a business reason why you're doing it. But if you're going to keep the car, most people keep their cars 12 years now.
Saw mine in the parking lot today. Old Old.
I should really have those dings puffed down a little bit. But keep it. You might want to lease that, and we can talk about that on the other side of the music break because I hear that little signal.
We got to get out of the way. 855-935-TALK as we continue with Herb Weisbaum talking real money.
Tom and Don are talking real money.
Do you suffer from hodgepodgeitis? I'm Don McDonald, and hodgepodgeitis is a disease of your investment portfolio whose symptoms include lots of stocks, loads of random loaded mutual funds, and maybe an annuity or two. Most who suffer from hodgepodgeitis dread opening their quarterly portfolio statements. They feel lost and confused. Investing seems overwhelming and the financial future uncertain. If you believe you suffer from hodgepodgeitis, see a 100% fiduciary investment advisor immediately. A proper diagnosis is the first step to creating a portfolio with a purpose based on a personal plan. Start on the road to recovery now by scheduling a free meeting with an Appella advisor at TalkingRealMoney.com. There is no cost, obligation, or high-pressure sales pitch. Take the first step at TalkingRealMoney.com or call 800-386-3004. Hodgepodgeitis is not a real disease, but treating it has been shown to improve mood, reduce fear, and even lead to a brighter financial future. Results may vary.
Your guides to a really great financial future. Tom and Don are talking real money.
Hey, thanks for joining us on Talking Real Money. Our telephone number is 855-935-8255. We're going to get to your calls in just a moment here, but we're finishing a little thought on a discussion with Consumerman Herb Weisbaum, whose work is at checkbook.org, among other places. I still hear you on the radio, too. But you wrote a great piece, which I think you go to checkbook.org to get this, right, on the EVs?
Yes, checkbook.org is right there. And we also have a podcast, a whole half hour on this at consumerpedia.org.
Okay, but one of the things, as you correctly pointed out, is for years, all we've ever heard is never lease a vehicle. Buy the vehicle. The leases are a great deal for the leaser, correct, not so much for the person doing the leasing. But you've changed your tune when it comes to the EVs.
You might want to consider it two reasons. Number one, it's new technology. So if the technology makes great leaps, like in battery technology, and it's been improving dramatically. You know, when the Leaf came out, it was getting 70 miles on a charge. Now we have some getting 500 miles on a charge. Wow. So you might not want to get stuck with that technology for that long. The second thing is, if you don't qualify for the credit, these vehicles will qualify in most cases for the dealers to get the credit because it's under commercial vehicle credits. If you got to make sure they pass it along to you, you got to check the paperwork. But say if I lease this from you, can I take advantage of the $7,500 credit? And check the paperwork to make sure it's there and they didn't up the price or whatever. But those are two reasons right now in the current marketplace why you might want to get an electric vehicle and lease it when you do.
And you also wanted to mention where we can still hear more about your work.
Sure. Consumerpedia.org is .org is the podcast, and we have an offer for your listeners.
Ah, beautiful.
Because as you know, that Checkbook rates services. So Consumer Reports rates materials like, appliances.
So you do your own research?
Yes. So we rate services, doctors, veterinarians, plumbers, whatever, in 7 major markets. We have undercover shoppers and people who are members rate the services for us. Wow. It's not pay to play. We're a nonprofit. This is absolutely legitimate in Seattle, San Francisco, Chicago, Minneapolis, St. Paul, Boston, Philly, and Washington, D.C.
And they just go to checkbook.org to find that.
They go checkbook.org/Consumerpedia.
Okay.
And you can get a free 30-day subscription.
Wow.
Everything on the website is free to anybody. But if you want the ratings in those areas, go to checkbook.org/Consumerpedia, and you can get a free 30-day subscription. We'd like you to join if you're in those cities. But if not, just check it out and enjoy.
Give me the cities again, because our podcasters are paying
Seattle,
attention right now.
San Francisco, Chicago, Minneapolis, St. Paul, Boston, Philly, and Washington, D.C.
All right. We'll see if we can get time to go on one more topic. But first, let's go to the phones because people have been patiently waiting. Evan joins us now on Talking Real Money. Hi, Evan.
Hey, Tom. How you doing?
I'm doing well.
Hey, thanks for your time, man. I'm a new investor, and I'm new to your show. And I'm basically wondering, I'm 31 years old, and I don't know much about investing, but what do I need to do to set myself up for success in the next 30, 35 years? I have a job now. I work in the music industry, and I have a Roth 401k, and I'm putting some money away in it every week, but I just want to make sure I'm doing everything the right way. So Where can I start,
Yeah, it's a great question. So, I mean, you've made a start. I mean, the first thing is what half of America does not do, and that is save something. Sounds like you've already, that fork in the road, you've taken the right turn there. So that's good. That's number one. Number two, the Roth option at 31 is fantastic. Remembering that a Roth grows tax free all those years. So all that compounding interest, you're going to wake up at 60 something, get ready to retire. You're going to have a lot of money you can pull out tax free. Those are two very good decisions. Here's the tougher part of it. Without looking at the plan that you're in, I can't tell you which funds to be invested in, because that is very important, right? What type of stocks you're investing in, if you're investing in any bonds. If you, for example, in the plan, if you really know nothing about investing, then I would say use a target date type of fund, because they do the work for you, right? They're going to say you're 31, you should be basically in stocks. Why mess around with bonds? And we manage that for you. And then over time, we'll add bonds as you get older, because you want more stability as you get closer to retirement. So maybe use a target date fund. And here's a little add-on to that. Target date fund for 80% of the money, and then put 20% of it in a small cap fund. Generally, plans will have at least one small cap fund. So now that you get a little more orientation to smaller stocks, remembering that those smaller stocks have grown far more rapidly than the big ones over long periods of time. Not lately, by the way. The big ones have had a huge run again this year, almost 20%. But for you, Roth is great. Be diversified. Have maybe the target date fund plus 20% in a small cap fund, and then get on with your life.
Fantastic. Okay, thank you very much for this feedback. It's wonderful.
Thank you for listening and for giving us a call. Yeah.
Yes, sir. I just wanted to mention that I'm working with Osborne Financial in Cleveland, Ohio. Are you familiar with them?
I am not.
By chance?
I am not.
Okay. I'll make sure I do a lot more homework concerning what I'm investing in. And, again, I appreciate your feedback very much.
Thank you, Evan. I mean, my only warning to anybody that's 31 and using an advisor is I don't know that you need one. I mean, you can buy a few index funds and be in a great place. And generally, when I hear these sort of things, the advisor is more of a salesperson, because they're selling you a product, they're charging a commission, and I don't want to see you doing that. So we've got to run, but thank you very much for your call. Yeah, so you look at that closely. Make sure
appreciate it, Tom.
Fee only, 100% fiduciary. Let's go back to the phones and talk to Gabriel here on Talking Real Money. Hi, Gabriel.
Hey, good afternoon. Good to talk to you, Don. I had a couple questions, if you don't mind. One was on a Roth. How basically does it work? I hear as long as you're working, you can put money into it, and you got to wait 5 years. But what if I put money in on the fourth year? Will I still be able to take it all out?
You'll have to. The clock will then start on that money, so you'll have to wait the 5 years there.
Oh, for each year, you have to wait 5 years every time you put money in. Okay, I got a part-time job. Can I put as much as I want in, or just what I make on the part-time job?
You just broke the code there. You can only put as much in as you actually make. So, because I have a 15-year-old daughter at home who works for her mother's pizza company, who has the last few years put several $100s in each year, but only up to whatever her earnings were. That's the maximum amount. And then I think before you hit 50, you can put $66,000 a year, and I think after 50, you can put in $7,500 a year. But you have to have that much in earned income.
Okay, last question then. I listened I know you guys don't like annuities, but what about that Assured Edge Builder? I think it pays like 6.2%, and it has a kicker of 8.5 as long as you don't touch the money.
I mean, in a general sense, yeah, I'd have to look it up, to be honest with you, Gabriel, to get into it. I'm not a fan of annuities, and especially when people throw these rates at me, like, well, it's paying 6. Well, okay, but that's some of your money coming back. It has a kicker. Oh, well, I mean, it's always murky. It's generally expensive. The people that sell these things have an interest in selling you that product because they make a big commission on them, not to pick on anybody. So, and here's the other part. You can build your own annuity. You can take your money The guy sitting across from me, he's done this. He has money he saved. He's paying himself every month out of that, living on in his retirement. That's an annuity. An annuity is just that, paying yourself the money back. So thank you, Gabriel, and thank you, Mr. Herb Weisbaum, for joining us here on Talking Real Money. Great job, as always. It's always a pleasure. We'll be back with more Talking Real Money right here. Stay with us.
Your real life and real future. Tom and Don are talking real money.
And thank you all for calling this hour. We'll be back next hour with more. And the number one call we kind of get is, what do I do with the money now? I just came into this money. What do I do? But the last hour we heard about expense ratios. We heard from somebody as a new investor kind of how to invest. Also heard from someone talking about, should I use a Roth or should I have an annuity? I mean, the bottom line still with all those things is if you have a plan, then those questions get answered. Most of you do not have a plan. You need to know how you're going to pay yourself, especially around retirement. You need to know how much risk you want to take and to make the money that you're going to need. That's the kind of work that we do every day here working with folks. So if you want more help, simply go to Talking Real Money, click on Ask an Advisor, talkingrealmoney.com.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.